This is Scott Becker with the Becker Private Equity Podcast. Here are 5 quick notes this morning. First, Intel Corporation versus NVIDIA is increasingly looking like Illinois versus UConn in basketball last week. For anybody that watched that, UConn just took it to the Illini, and I'm an Illini fan, so I'm familiar with it, but this is how NVIDIA is beating up on Intel. Intel's become sort of the commodity chip company. It's having huge operating losses, even with help from the government, and NVIDIA is growing into selling the most complex chips. Thus, Intel dropped another 8% yesterday after announcing a large operating loss. NVIDIA keeps winning. Second, Apple and Tesla, 2 of yesterday's darlings, seem stuck in the mud right now, with Apple trying to reignite interest in each iPhones and iPads, and also looking for more markets to enter. It seems to have given up on cars, and it's looking at home robotics. As an investor, and I'm not particularly an investor in Apple, I might have shares through index funds, but I'm not particularly an investor in Apple. But as an investor in different venture capital funds and startups, whenever a company says they're making big pivots to try the new thing, this is always a sign that they've got some problems on the horizon. And that's where Apple sits today. Tesla is struggling as well. We talked about this yesterday, how Tesla sort of hit its natural plateau point, and now it's blocking and tackling from there to try and grow. Very challenging. Third, we're kicking off our annual Becker's Healthcare annual meeting on Monday, April 8th. More than 550 speakers from health systems, as well as Martha Stewart, President George Bush, Michael Strahan, and Coach Bill Belichick. Should be a tremendous size conference. We're very excited about it. Fourth, article in Reuters, uncertainty over rate cuts sent shivers to the U.S. government bond market. And this is fascinating, actually. The bond markets, the rates for the 10-year and 30-year keep on going up, because people keep on betting that they'll have time to pivot to longer-term bonds when the Fed actually starts cutting rates. So if you're an investor in treasuries, you've been paid to stay relatively short-term. 1- and 2-year bonds, 1-year bond, 2-year bonds, right about 4.8 for the 2 years, 5.06 or so for the 1 years. The 10 years are 4.4%. At some point, you'll get back to what's not an inverted yield curve, and people have to transition from short to long term. But right now, as the U.S. has more deficit trouble, has more trouble cutting rates, it's possible that those rates for the longer term bonds will stay relatively high for a long time. So people don't feel compelled to make that switch yet to the 10 and 30-year bonds. Thus, the demand is low and yields are staying high. It's really fascinating to watch from a macroeconomic standpoint. This story we found today, BlackBerry shares rose pre-market and unexpectedly positive results for the latest quarter. Here, if you're from my generation or you use the BlackBerry, you watch BlackBerry headlines closely with the long fading hope and love that they will bring back a BlackBerry phone. Alas, they fully made the pivot to being a cybersecurity company versus a phone company. But again, this does remind me that it's better to have loved and lost than to have never loved at all. And that's how we saw the love affair with BlackBerry. The last thing I'll talk about is, maybe this isn't even, the PS is this, is I hit a milestone birthday soon, and I want to tell you what birthday it is. There are these different schools of thought on transitions in life. There's this famous book, From Strength to Strength by Arthur Brooks, that says at some point you move to being a teacher, advisor, consultant, mentor, coach versus player, doer, operator, producer, manager. And one of the challenges you see as you make these transitions is many of us aren't quite ready to make that transition fully. So it's really a transition over a long period of time. It's how you transition from being a doer, productive person to advisor, teacher, and so forth. And I think it's a fascinating discussion and trying to square with oneself how one approaches those next 20, 30 years of life. And I think meshing those two thoughts is very fascinating, I find. The other book that have read and reread and think is so right on is the book by Dr. Peter Attia on lifespan versus health span. And again, this concept that you want to ultimately, if you live to 85, you want to be as healthy as possible to, let's say, 83, so that you don't have these wasted long years at the end of your life. And I think it's a fascinating perspective. Again, I'm not even close to that, so don't worry. but maybe you should. I don't know. Maybe you wish I was. But in any event, text me at 773-766-5322 if you enjoy this podcast, and happy to happy to send you $100 Amazon gift certificate if you're the first person to go ahead and send me a text on this podcast. Thank you.